So glad you could join us here on a Monday. I'm Marlon Bowling with you, your tour guide to your ag commodity trade on the grain and livestock markets. Well, we had some new numbers that just came out a short time ago from USDA. They're hot off the press. It is our Monday export inspections number report, and let's go take a look, and we'll also bring in a little expert help along the way too from Allendale. So here's a look at our numbers that have just come out, and we'll talk with Brian Splitt here momentarily. On the corn number, we had a total this week of 1.11 million tons. Now that compares to the previous week when we had 1.01. Sorghum, we had a total of 60,695. Last week we had a total of 112,046, so about half of what we had last week. That tends to bounce up and down significantly from week to week on the sorghum. Soybeans may be a bit of a disappointment. 285,972. Last week was 476,000. Now a year ago I was looking back and that total was 400,500, so under both of those. The wheat, 578,627. A week ago that number stood at 536, and a year ago that number was 446,000 tons. So a fairly decent wheat number. The soybean number pretty low. The corn seemed to be back where it was a couple of weeks ago. Brian, thanks for joining us. Wanted to get your thoughts on if these numbers mean anything to the trade here today or not.
I still think that the more of the attention is going to be paid to weather. We've got the time frame where we're really going to be seeing the crop being made. Pollination for corn is happening and will be happening for the next couple of weeks, and then we're going to be going into pod fill time for soybeans. So I think the trade will watch these inspections, look for major disturbances, but I don't think there's anything major on this week's numbers here.
So you think that we're going to start from this point forward maybe seeing bigger jumps in the moves in the soybeans versus the corn now?
Today might be indicative of that. It's hard to make something out of one day of trade, but it seems like right now with the 6 to 10 day looking a little bit less threatening, but the 8 to 14 day looking more hot and dry, we are seeing a little bit more of a bid under the soybean market than we are for corn today, and I think that might be part of that story is as we get into more and more extended forecasts, if they're threatening, that's going to be more so for the soybean crop than it will be for corn once we get through pollination.
Well, let's take a look at the futures, and we'll see what you're talking about. Now, on the corn market today, it has been under just a little bit of pressure. That started overnight when it was down about a nickel, then it firmed up toward the morning hours. Right now, it's just trading basically flat. September corn just up one tick now at 376.5. December unchanged at 389.5. And on the soybean side that Brian was just talking about here, we have the August soybeans 3 1/4 higher now at 992 1/4. September up 3 1/2 now, and you have November now 3 1/4 higher at 1004 3/4. So it's back within about 3 cents of its high from the overnight trade, well off its low now by 11 cents. Now, if you look at the wheat trade in Chicago wheat, September is down 4 3/4 at 506. On the Kansas City market, we have September currently trading 7 3/4 lower at 505 3/4. Meanwhile, Minneapolis has September trading 4 1/4 higher at 762 1/4. So a lot of divergence between the Minneapolis and the other two exchanges. Brian, I assume that's probably going to keep continuing here.
I would think so. The real production story is that spring wheat, and the winter wheat, the crop is what it is at this point. There's still questions about what kind of yields we're going to see for the spring wheat. So I would expect that we'll see those two the hard red and the soft red winter wheats continue to lose value compared to the spring wheat.
On the cotton market, we'll pause after this, but on the December, we have it trading 131 points higher at 67.89 right now. A big move in that new crop cotton contract. Brian, we'll bring you back here in a moment. We'll talk a little livestock trade too. Our guest, Brian Splitt of Allendale, will be back right after these messages. We are talking with our very special guest, Brian Splitt of Allendale Incorporated in McHenry, Illinois right now. And Brian, right before the break, we took a look at the cotton market. And on the cotton, we were seeing a big surge in that December new crop contract, about 130 points higher. And before I get into the cattle and hog discussion here, I wanted to get your thoughts on what might be driving that market action today. Have you heard much about that?
It looks like there should be some good value buying above 66 on this December contract. We had actually made some very strong lows almost a year ago at 65.50 and then gapped higher coming off of that low. So just recently the December contract has gone and dipped its toes into that gap, and we're seeing some strong short covering against that. Now, I think this December contract needs to see some trade and some footing over 69 to bring in some more technical buying and some new long positions to enter the market.
Hear more and more talk about a little concern about the dryland cotton in northwestern Texas, around that panhandle area there. Boy, if it's not irrigated, they're having to deal with 100-degree temperatures for an extended time, maybe. Now, looking at the livestock trade on the live cattle, we had a little weakness creep in shortly after the open today. Brian, we had them opening fairly flat. August live cattle now down 58 at 117.22. October 28 lower at 118.30. Looks like about a dollar wide trading range here so far. Right now, the deferreds are just trading narrowly mixed. On the feeder cattle side, as we take a look at the August contract, wow, 2 pennies higher at 154.30, and September up 7 at 154.15. Definitely nothing to write home about, at least up to this point today.
It's funny. It seems like every time we talk about livestock, our conversation ends, and then they really start to move once we hang up the phone. But it looks to me like this August contract has been really just trading in a range where it's finding some strong resistance up against the 119 area, and the 50-day moving average is going to sit right above that. And yet we find some very good support every time we trade down around the 114 zone, and you've got the 100-day moving average just below that area. This market had a limit up move last week and really didn't have any momentum to follow afterwards. So if we can't get through last week's highs early in the week, I would suggest that we might be trying to revisit last week's lows by the finish of this week.
Okay, let's look at the lean hog trade then and see how we're holding up there. Now, this one had two very steep drops here the past two trading sessions on the lean hogs on that August contract. Looks like it's rebounding a little bit here today, up 68 at 80.58 per hundredweight, well off its earlier low by about roughly 80 cents right now. October up 34. How optimistic are you that maybe they have found a support level for the time being?
Well, I can tell you what we've gone and hit. If there's a little area that we held on Friday in this morning's open, if you just draw the uptrend from the major lows that we made in April to the lows that we made in June, we've gone right to that uptrend line, and that's where this market's been having a hard time seeing additional weakness over the last two sessions. A move through Friday's lows would open up the door on this August contract down to the 78 area pretty quickly. We do have some bearish fundamentals that should be hitting us as we're going to be seeing the overall week-to-week and month-to-month production really start to incline over the next several months here as we hit fall. So, the trade knows that, but that just seasonally usually puts some pressure on these futures.
All right, thanks, Brian. Good discussion. Brian Splitt of Allendale Incorporated in McHenry, Illinois. Good stuff about the markets. So my appreciation for him explaining all that fine detail.
Yeah, there's a lot going on. Lots to wrap your brain around for today. Past couple of weeks, that's been the case. Thank you, Markets Editor Marlon Bowling.